At the very least, we're looking at gridlock, usually something that is good for the markets, but that really depends, doesn't it? Axios reporter Caitlin Owens, market watcher Doug Kass, and National Taxpayers Union senior fellow Mattie Duppler. Mattie, you know, most of the times I agree with that consensus about the markets liking gridlock, et cetera. But there are a lot of things that even the markets, low that they are for government disruption, unless it benefits them, like bailouts after the last meltdown, they don't really like the idea that we're turning away from all this spending. They don't like the idea that these deficits and the debt cumulatively are piling up, and with no real plan how either or both parties are going to deal with it. So that's why I argue it might be a little different this time. What do you think?
I agree with you, Neil. It remains to be seen what the vision is that Democrats have for the next year. Now, make no mistake, in 2019 and in 2020, what House Democrats are going to do is try to present an agenda that sets the stage for them to win the next presidential election. But unfortunately, when you control a chamber of Congress, this is something Republicans found out pretty starkly in 2010, you actually have to govern. And we don't know what Democrats plan to do with all of that responsibility now. As you saw in that previous package, there's a lot of talk from incoming chairmen about investigations, impeachment potentially. However, the leadership of the party, Nancy Pelosi, has tried to tamp down some of those expectations. So I think it would be a mistake for Democrats to go too hard on this investigatory procedure to really get bogged down in kind of the language of the swamp rather than being able to articulate a vision for the future. That's exactly what Republicans did in 2010. They were able to leapfrog the difficulties in the spending battle that happened at the end of the year in 2010 and use that to set the standard for what they're going to do for the coming years, which is cut the size of government, distill government spending, and ultimately be pretty successful politically for those efforts.
You know, Caitlin, I was looking at even some of the House races that are undecided. We're so focused on what's going on in the Senate, justifiably so, in Florida and, you know, obviously what could happen in Arizona. But there are 9 races still not cleared for takeoff, and 3 in California, 1 in Georgia, 1 in New Jersey, 1 in Maine, 2 in New York, 1 in Utah. Even if Democrats were to score outright victories in 5 of those races, they would be looking at a net gain in the House of 38 seats. That's a big deal.
It is a lot of seats, Neil. And, you know, I think that one direct impact of how Democrats do is on their leadership races, where if enough Democrats are in the chamber, then Speaker Pelosi or Leader Pelosi has more of a chance of becoming Speaker Pelosi.
Right.
Another thing is, I think that just kind of continuing on your line of just talking about investigations by Democrats, keep in mind that a lot of these Democrats that are in these tight races that have unseated incumbent Republicans, they ran on an agenda not of opposing Trump, but of getting stuff done. So they ran on health care. They ran on prescription drugs. And I think that the more Democrats that are in the chamber that kind of had this like proactive agenda, they're going to be pushing for the House to actually do something on that. Now, while that can overcome the gridlock we see in Washington is a different question, this stuff does matter.
You know, that's a very interesting point. You know, there are, you know, cooler comrades prevailing to try to get stuff done. Problematic to do, though. You know, I'm looking at the math here, Doug, and I'm wondering how markets are going to deal with, you know, forget about something not getting done and forget about Democrats who argue this isn't about impeachment, we're just launching investigations, which presumably could lead to that. But how does this all play out, you think?
I think that the political bullet points are interesting, but the problems facing the market today and over the last month run much deeper than where you are on what side of the pew, whether you're a Democrat or Republican.
Explain.
Well, the market began to suffer when interest rates began to rise. And for the first time, really in probably a decade or 12 years, there is an alternative to stocks. The S&P dividend yield is about 1.8%. 1-month Treasury bills yield 40 basis points higher, and you only have to go out to 3 years to get 3%, Neil. The second thing is, once this market momentum started to reverse and deteriorate, a changing market structure, the proliferation of ETFs, which are a passive strategy, and quant strategies like risk parity, which are agnostic to balance sheets and income statements and private market value, began to be the tail that wags the market's dog. And these passive products and strategies tend to exacerbate the short-term swings. We're seeing it today.
Right.
We saw it Wednesday, the day after the election. I called it a one-hit wonder and put on a lot of shorts.